Hey guys, Realtor Adele, your favorite realtor and investment property strategist. This month's housing market report is about mortgage rates. We'll touch on home prices and appreciation, a bit on the economy, see if inflation is still a thing, as well as take a look at housing market trends in Metro Atlanta. Let's start with everyone's favorite mortgage interest rates. I mentioned in my last report that the outlook for 2024 in regard to rates is all about stabilization and making rates more affordable. Now, we're not quite there yet. However, that remains the goal of the Feds. Rates are currently hovering near 7% and are expected to balance out in the months ahead to the low sixes and ultimately right around 6. If you're in the market to purchase a home in the near future, what's important to note is we are not likely to see mortgage interest rate at historically low levels as they've been in the past 3+ years. In fact, right now, we're probably only about a point from where rates will eventually settle. Now, why is that? Long story short, it's generally about inflation and the dynamics between supply and demand. However, there are other factors at play, such as the economy and the unemployment rate. We'll continue the conversation on the next slide because I want to get into the details of why all of this is. This screen shows the CPI, so the core price index, and this measures inflation. The goal is to have a soft landing. That is the goal of the Feds. They have made that statement for a couple of years now. So an overnight or drastic drop in rate is not ideal based on past experience. The red circle on the left shows us what happens when rates were cut too quickly. They kind of boomerang or ricochet back up almost just as quickly. So there must be room for adjustments to happen. And so this chart is something that the Feds are following, or should I say they are using it as a guide as to how quickly rates should be adjusted. And I don't want to get too much into the weeds of this actually. In fact, let's move on. I don't want us to get too bogged down. I just think that it's important to have a basic understanding of what's happening and why. Let's take a look at housing market trends for Metro Atlanta. And we are going to focus on pending and closed sales, days on market, average sales price, the percent of list price received, and the month supply of inventory. Let's start with single family detached. We can see that dependent sales were just under 3,200. Closed sales were at 2,881. Days on market, 39. Average sales price for single family detached in Metro Atlanta, $522,030. Percentage of list price received, 98.7. And the month supply of inventory is at 2.4. For attached homes, pending sales are just over 1,000, so 1,009. Closed sales, 900. Days on market, 43. Average sales price for attached homes, $403,931. Percent of list price received, 98.8. And month supply of inventory, we're at 2.8. To recap, mortgage interest rates hover just under 7% and are expected to settle to the low sixes in the coming months. The numbers for home price appreciation for 2023, those numbers are in, and it is 6.5%. Hawaii saw a loss in home values of 3.4% due to the devastating wildfires. All major metros saw positive price appreciation. Metro Atlanta had a price appreciation of 6.3. The current average sales price for detached single-family homes in Metro Atlanta is $522,030, $403,931 for attached homes. Average days on market for single-family detached is 39 and 43 for attached homes. The month supply of inventory for single-family detached is 2.4 and 2.8 is the month supply of inventory for attached homes. That's it for now, guys. As always, it is my goal to bring you accurate information from trusted sources so that you can make the best decisions for yourself and your family. I would like to take a moment, should I say, to extend continued blessings to the people of Hawaii. I recently visited the Big Island, flew into Kona, had the most amazing time. The 10 days were not enough. And mahalo for your warm hospitality. I will definitely be back. See you on the next video, guys.